Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tendayi Kapfidze, chief economist at Nasdaq-listed LendingTree, to discuss the economy, the Fed, rates, and tips for borrowers. Tendayi, it's great to see you as always. Welcome back to Trade Talks.
Glad to be here.
And the passage of the $1.9 trillion bill and increasing economic activity as vaccine distribution accelerates has the market concerned about overheating the economy. How do you expect the FOMC to manage this balancing act?
Yeah, I think the FOMC have already picked their position, and that is they expect inflation, if it does emerge, to be transitory. That means that it's going to last for a few months as we get through the base effects from early to mid last year. And then probably later this year, we're going to see inflation stabilize. So I don't think they see the risk of a longer term inflationary episode.
Are rates still low enough to support the housing purchase market?
Absolutely. So rates are still really close to, kind of historical low levels. The biggest challenge in the housing market right now really is more a lack of inventory than this small increase that we've seen in rates over the past couple of weeks. And another thing that's going to be a factor going forward is if you look back at all those people who were able to refinance last year, they got into really low rates, and that has an effect of almost locking people into their homes. Because if you have to move now, potentially you'd be moving and getting a new mortgage at a higher rate. So these really low rates that we've seen the past year or so have the effect of locking in some people in their homes. And that means that the inventory challenge that we see in the housing market is going to continue.
That's a really good point. So in addition to that, how is it impacting lending standards and the demand for loans?
So lending standards got tight early to mid last year. And there was a lot of uncertainty from banks and lenders around what's happening with the employment situation, how are people going to be able to keep up with their loan payments. What we've seen since then is that because of the stimulus and things like forbearance and other interventions, this kind of avalanche of bad loans and loan losses still hasn't occurred and may not occur. So I think banks are going to start getting a little bit more open and loosening some of those lending standards and accepting more people to borrow. As the labor market recovers, as the economy starts to recover, I expect lending to pick up as lending standards improve.
And what are some tips for borrowers to weather this particular cycle?
So the tips for borrowers to me are always the same regardless of the cycle, right? You want to make sure that you're getting the best possible deal you can on all these financial products. The best way to do that is to compare lenders and look at many different rates for whatever it is that you want to get. Another thing, obviously, with borrowing is credit score. Credit score that can get you much better rates the higher your credit score is. So make sure that there's no errors. Try to make sure you keep up with your payments and work with your lenders when you face challenges, because oftentimes, as we all learned last year, there are things that they can do, forbearances, et cetera, that allow you to stay in good standing with the lender while giving you some relief in terms of having to meet payments. So communicate with your lender, compare lenders, and make sure you try and get the best rate for yourself out there.
And actually, I have one more question for you. We heard, I believe it was last Friday, that mortgage rates actually went above 3% for the first time in a year, but pre-COVID, does that move to 3% really make that big of a difference from, let's say, 2.8 to 2.9 to 3% over the 30 years of a loan?
I mean, every percentage point, I think, makes a difference in terms of how much your payment is going to be. And really over 30 years, it starts to accumulate, right? So, if you're looking at, say, a 30 basis point move, that can turn into tens of thousands of dollars over a period of 30 years. And another thing that I always tell people is that if you're looking at the average rate, right? So right now the average rate is just a little bit above 3%. That means that there's still a lot of rates out there that are, 2.7, 2.8, right? There's a wide range of rates. So don't just look at the average rate and think that that's the best you can get. You can get lower than the average rate, right? That's why it's the average. So again, talk to lenders, get your credit score as high as you can when you're getting a loan. And if you compare loans, then you're going to have an opportunity to save.
All right, Tendayi, we appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thank you.